Alrighty, so now we are simply going to look at flip zones that also sweep liquidity. So it's the exact same concept, exact same theory of what we look for with the structure zones that sweep liquidity. We are simply looking for, did the flip sweep liquidity in the creation of the zone? Okay, did it grab some liquidity as it was being formed? That's it. Because remember, what's the reasoning we're doing behind that? We are looking for where potentially institutions used available liquidity, so I'll get into this in a minute, but behind a high to enter the market. It's like another filter that perhaps means institutions were involved in the creation of that, okay? So not only did it break structure, not only did it take out another zone, but it also used liquidity as it was formed, okay? It's another little filter that we add on top, all right? So before we kind of dive into all of this, you've probably seen all of these variations and all of these ridiculous names, and you don't need to memorize any of this. The names don't really mean anything, as in, this is just some rubbish I came up with to try and separate them. But essentially, I view all of this as the same, okay? And you don't need to picture it. I'll make it hopefully reasonably simple for you as we get into it, okay? So let's start here with the left-hand side, which is what we've been looking at before we got to the liquidity module, right? Which is simply just a standard flip zone, okay? So we'll start with demand. So price is moving to the upside, okay? This low breaks this high. So what does that create? It creates a demand zone, right? That led to the break of that structure. So then if demand, let's get my paintbrush, if demand is going to be able to do its job, right? What should happen? Price should come into the demand zone. It should react. The reaction is key. Obviously price reacts in this instance. And if demand is going to do its job, it should move price to make a higher high, right? It should break structure. But as we can see, it doesn't break the high. It doesn't form a higher high. And then price moves to the downside. So what that means now is supply has stepped in and it's overpowered demand. Okay, so we've had a reaction from demand. That reaction has failed to do its job. And then price is broken and closed below the reaction. Okay, so when we get a break below there, that's when the reaction has failed. But we only get true confirmation that the zone has completely failed when price actually trades through it. Okay, so we get a failed reaction there when price moves below the reaction, but we wait for the actual whole zone to fail, right? And then that's when we get in this case, the shift in structure as well. Okay, so I'll go over it. We get the reaction to demand, the reaction fails to do its job, price has a failed reaction, then the zone fails and structure fails at the same time, okay? So now you have a demand to supply flip, okay? So anywhere from the low of the reaction, okay, to the top of the reaction, that's where we can draw on our demand to supply flip range, right? Anywhere within that range. And then like I've done here, we can obviously refine it to the pivot zone within that, right? 1 or 2 candles or whatever. Okay, so that's the standard flip zone. And then obviously the same for supply to demand, where price comes into supply, it fails to do its job, it fails to make a lower low, and then we get the failed reaction, the failed zone, and the structure shift in this case, right? And then we look to enter on the supply that caused that to happen, okay? Now, in this instance, what do I call it? A no sweep flip, because it doesn't sweep any liquidity in the creation of the zone, right? The flip doesn't sweep any highs. If you look at where all the highs are, right, in here, at no point or within the flip does that get swept, right? So when price comes down here and you're looking for, this is the flip, did it sweep any high? Well, it didn't sweep that high, and there's nothing here, and there's no highs here. It's just a straight movement up and down, right? So just price comes in, price comes up, there's no highs that it breaks, and then price comes down. So when you're looking down here and you look up at this flip, did it sweep any liquidity? No. Whereas now when we look at the flip zones or the sweep flips, they all did, right? It's the same thing. We have demand, price comes into demand, the reaction is key. But in that pullback, right, in the reaction, what does it have? It forms, I guess you could call it like an internal high within there, right? So price moves down and then price sweeps the liquidity that would have built behind that high, right? And then we get the movement to the downside, okay? So then when you're looking at this flip here, whether you take the whole range or you just refine it to the pivot like I have here, and you're looking left, what has it done? It's swept the liquidity behind that high, okay? And these are all just variations of that. So this one, basically the same thing. We come into demand, we react, but rather than just one little high, we get some equal highs, right, that build up. So we know there'll be some, double tops, lower time frame traders, whatever, trading that range. Liquidity gets swept, and then boom, we get the demand to supply flip. Likewise here, this one we get an initial reaction from demand, okay, fails to put a higher high. Price moves down, but we haven't quite failed the zone yet or broken structure, and then price moves up again. And what does it do? It grabs the liquidity behind the high from the initial reaction, and then we get the movement, okay? So we assume that An institution probably stepped in here to overpower demand and it used the liquidity behind that high from the initial reaction, right? And then last one here, so again, very, very similar. It doesn't really make a difference. It's just a high was swept in the creation of the zone, right? We come in before we react to that demand or the pivot demand, we have a little bit of a pullback. Then we get the reaction from the demand zone we're looking at. And that reaction fails to put in a higher high, right? It fails to do its job, but it sweeps the liquidity behind that little high there, right? Institution steps in, uses liquidity behind that high to overpower demand and break structure. And that's it. And now we have another sort of variation of, and there's probably other variations, right? These are just kind of the few obvious ones. But all that matters is when you're at this point here, okay, and you're looking at a flip, what you're doing, you're just looking at, okay, there's your supply zone, it flipped demand and broke structure. So I'm going to get short. You're going to be doing it at the exact same point here. The only difference is you're just asking yourself is, when that flip formed there, did it sweep any liquidity to the left? Yeah, it grabbed the liquidity there. When you're here, okay, it's a flip. Did it sweep any liquidity? Yeah, it swept those equal highs. You're looking down here and just asking yourself, okay, there's a flip, I can identify it. Did it sweep some liquidity when it was formed? Yeah, right? Down here again, you're just looking, okay, yeah, it swept some liquidity there. That's it. So I personally view all of these as the same. It's just a flip that swept liquidity, right? I don't necessarily view any on their own as any higher probability than the other. Now, some of you might want to be very strict with all of these different ones and you might want to click stats on them. But for me personally, I view them all as the same, okay? And then likewise, we'll quickly just go over the opposite. Yeah, you essentially have price come into supply, it reacts, it fails to put in a lower low, but in the pullback of that reaction, what does it do? There's some liquidity here. Now, one question some of you may have is, how strong is this low, right? This low didn't break any structure at all. So how much liquidity is behind that? Yeah, maybe not a lot, but for me, that is enough for it to be classified as a flip that sweeps liquidity, okay? So for some of you, you may view like a flip like this as higher probability because technically this low did break at least some structure, right? It broke that high there. So arguably there's more liquidity behind that low than there is behind this little weak internal low there, right? In theory, right? That makes sense. But I personally haven't necessarily viewed this as any more higher probability than this. Like I said, right? I just keep my trading somewhat simple. I know some people are probably thinking it's not simple at all. That's a totally fair assumption, right? But I view all of these as a flip that sweeps liquidity, okay? So like I said, I don't want you to feel overwhelmed by this. It looks like a lot of variations and probably a bit weird to get your head around, but you are literally just looking for a flip like we have done before. But in this bit here, you're just looking at, where the zone is, did it grab any liquidity to the left, in the formation of it? And that's it. And then we simply just say, rather than just a flip, we call it a sweep flip, okay? Maybe you've got a better name than me, but that just makes it easy enough, okay? So hopefully that makes sense. We're simply just looking for, remember, the philosophy of what we always bring it back to is we're looking at a zone. We can ask ourselves questions of what are the odds that an institution was involved in the creation of it? Did it break structure? Yes. Did it overpower another zone? Yes. And was liquidity swept within it? Okay. So looking for sweep zones, it's just another filter to increase the probability of the zone. It's not a necessary requirement, okay? Necessarily, it may depend on what your plan is, but for me, it just needs to have at least broken structure, okay? Cool, let's go look at some real examples. Okay, so with flips in general, and also, sweep flips, ones that sweep liquidity, when you're first kind of trying to get used to this idea, and especially when spotting them on the charts, understandably, it can be sometimes a little bit confusing to spot because they come in all different shapes and sizes. They're always going to follow the same framework. They're going to have the same, things that identify whether they are a sweep flip or not, but they're always going to look, like I said, unique, right? So whenever you kind of keep it simple, right? If you see a pivot point in price, right, we know that's likely where an injection of supply came into the market. So we look ideally for the buy candle that then gets the sell candle that closes below it, right? And then we can draw on our supply level, but what's the first filter that we use to justify that it's what we call, a strong zone, an institutional zone? We want to see, did it break at least some form of structure? So at a minimum, it must break a fractal high or low, right, at a minimum. So in this case, we go, right, okay, we have a pivot point in price that led to some form of a break of structure. Okay, happy days, that's a structure zone. Let me just redraw something. So let's say we have something like this, right? Okay, so first step, you go, right, price is here. I want to see potentially we can look for a supply zone. Is there a pivot point in price? Yes, we can see there was an injection of supply there. Did it break some structure? Yes, it broke that low. And you would draw in your supply zone. Okay. So now now the next step you would go, okay, I have a structure zone. Is it a flip zone? So what's the first thing you would look to try and see if it's a flip zone? Is look, where did the reaction start for the pullback of the flip? Sorry, the buy to sell, right? So you've got a zone, that pivot point in price that led to a break of structure. If you want to know if it's a flip, just look where that pullback started from, that reaction, and then look left. And that's how you'll find out if this buy to sell is flipping another zone, if it's reacting from another zone, right? And as you would see in this case, you would look left and go, oh yeah, there was an unmitigated demand zone here, right? It's a valid zone that led to a break of structure. So now you see how you start putting the pieces of the puzzle together. You're looking for a pivot point in price that's relevant. Did it break structure? Yes. Right? Can I draw it on where you have a buy candle where the next candle then closes below it? Right? And then you go, okay, I have a structure zone. Is it a flip zone? Well, where did the reaction start from for this pullback? Look left. Oh yeah, there was an unmitigated valid zone over here. So now I can see that I had a demand zone that broke structure. Price came into that demand zone. It failed to do its job. It failed to make a higher high, and price has then overpowered that demand, right? Supply has taken control. So the next step then would be, if you want to know if it's a sweep, a flip that swept liquidity, when you're at this point and you're looking at your zone, you just simply go in the creation of that zone, in this movement here, was any structure swept? Was there a high taken? Well, in this drawing, there wasn't, right? Which is this example here. But then you get all of these other examples where you're at this point and you're looking at your zone, you've seen that it broke structure, you've seen that it flipped another level. All you're asking is this bit here, where the actual flip occurred, was there a high taken, whether it was within the pullback, like with the first two examples, or like the initial reaction gets swept and then we go, or there's something in the previous leg. And that's it. That's all you need to look for. Now, like I said, I personally view, or at least at the time of the recording, I view all of those sweep flips basically as one and the same. But some of you stat junkies out there, you may want to record these as different, different flips within your journal and things like that. And when you're backtesting, and see if you can find different stats on those. But for now, I've kept it pretty simple and I view them all the same. So let's take a look at these on the charts. So euro dollar here, 15-minute chart, but really doesn't matter. You can look at any time frame you want, the 7-minute, the 8-minute, the 3-hour chart, the 27-hour chart. Markets are fractal, right? It's all the same thing. Candlesticks are just making sense, of that price data. So let's kind of just dive into some price action and let's see what we can see. Now, what I'll say again is at this point, I'm literally just going with you and practicing identifying whether something is a flip that swept liquidity, whether it is a sweep flip. At this point, we are not thinking about whether we should trade from it, what kind of trade idea, how we're going to trade it, none of that, no market structure. We're literally just identifying where is a sweep flip, and that is it, okay? In the further lessons, that's when we'll start to put it all together and start to formulate trade ideas, right? So straight away, if you want to kind of train yourself again, just keep it simple, right? Pivot in price, okay? So we know that demand with that sell to buy came into the market, right, to push price to the upside. So at a bare minimum, did it break any structure? Yes, okay, we can say, that it broke that fractal high, right? So first step is you have a demand zone, right? And we can obviously take the whole range or we can refine it to that nice sell before the buy, right? Nice clear zone, okay? Cool, happy days. So that's obviously a demand zone. Now, what do we do to see if it's a flip zone? Well, we look left from where the reaction started, right? This is where the pullback of the zone started. And we look left. And is there any unmitigated zone that it's reacting from? And as we can see, right, we have this level here. And you can take it from like the low to the high, right? So you get to the buy to sell pivot, or you can obviously refine it a little bit more to that like that. And as we can see, price traded into it. Now, it must stay within the zone. If it trades any higher, like even if it just spikes it, then that means this zone's invalidated. Like even if you sometimes I'll do that and draw it to the whole range. If this move had to come in and just spike that by a micro pip and then pull back, that for me would not be valid, right? Because this supply needs to contain price. The reaction must stay within. If price did this and then pull back, like if it went just above and pull back, not valid, right? That would not be it reacting from supply because supply has failed. Obviously in this instance it has, supply contained price and it reacted. So if this supply here, right, is to do its job, what should happen? It should cause price to at least break that low, right? Break some structure and form a lower low. It's failed to do that, right? So the reactions come in, demand stepped in, and then we've broken and closed above the reaction. So now we have a flip. Okay, so we found a demand zone that broke structure, it's flipped another level, so now we have a valid flip. So now the simple question is, did it sweep any liquidity in the formation of its zone? So the only area we're looking at to justify that is in the actual reaction in the pullback itself. Was there any low in here that was swept? Okay, this one's a little bit more subtle, but it's valid. Okay, so the reaction starts here, and if you look at the lows, right, price came down, and then the next candle fails to break that previous candle's low, right, which means we've then pulled up, right, and then we've come down, and then we've gone. So if I just drag that over here, well, I drew it in two pieces, but essentially that's what it looks like, okay? So that's where you have a low that formed in the market, price went up, came down, and used the liquidity below that low, okay? So the liquidity will build below that low, and the theory is that that sell side liquidity is where institutions are going to use that sell side liquidity to buy into the market, okay? They're using that liquidity to enter their long positions with minimal slippage, right? That's the general theory behind why we see it as another filter that can potentially signal there was BFI involvement in the creation of this flip. So demand was strong enough to break structure, it was strong enough to flip another zone, and it used liquidity, it swept liquidity in the formation of the zone, okay? So that is a flip that swept liquidity. And that's the process you want to go through the whole time. So keep it very simple when you're looking for supply and demand zones. Just look, where are those pivots in price? Did it break structure? Yes, okay, so that would also be a valid zone, right? You obviously got the whole demand range, which we can see price tapped into to continue. You have the refined pivot zone within that. Okay, and if you wanted to know if that's a flip zone, well, that's the start of the pullback, right? Look left, did it react from anything? And yes, we know there'll be some supply in here, but on this time frame, that's not really a valid supply zone, right? It's just bearish candles all trading lower. So not really something I'd be interested in. Now, if imagine this was a nice like pivot in price and we did have a supply zone, then yes, then that would be a reaction that sweeps liquidity, right, below multiple lows here, really nice flip zone that would have been, that then moved higher. But in this instance, because it didn't actually react from a valid supply zone on this time frame here, it's not a valid flip, not a valid M15 flip, okay? And that would be the difference. But this is a structure zone that did sweep liquidity, right? You can see all of the trend line liquidity there, swept the liquidity and moved to the upside. It's just not technically a flip, okay? Cool. Let's see if we can kind of see anything else. Obviously a little bit messy price actions. Again, not talking through trade ideas, just purely looking for a zone, okay? So we can see here, another pivot in price, right? Broke structure. So first step, draw on the low, that got broken, okay? And we can look for the supply that caused that move, okay? So bit of a messy one. Obviously the most ideal way to draw it would be like this on a single candle pivot, or you can take that sort of buy to sell range, or you may even want to include the whole high there, right? But let's just take this. Now, let's see within here. So yes, this would be a flip, but it doesn't sweep liquidity, okay? So remember, what do we look for if it's a flip? We look for where did the reaction start for the pullback? Look left, what do we have? Do we have an unmitigated demand zone? Yes, we do. It's a valid zone, right? That broke structure to the upside. So when price comes back into this zone, it reacts. The reaction is key, but what should the reaction do? It should make a higher high. If it fails to do so, supply comes into the market. So from the low of the reaction to the top of the reaction, just like we've drawn here on the blue box, that is your demand to supply flip zone. The difference here is that this zone did not sweep liquidity. How do we judge that? Well, we judge this pullback here from the low of the reaction to the top of the reaction. In that pullback there, were there any highs that were swept? Were there any structural highs? Well, no, because price just comes down. All of these candles break the previous candle's low. All of these candles then break the previous candle's high, and then it comes down. Okay, so if we look at that, what is it? It's just a low, a high, and a low. There's no high swept, right? For there to be a sweep, you would need to see something like this, right? A high that gets taken. Nothing gets taken in here, right? So that's why it's just a flip that didn't sweep liquidity, okay? So that's not one that we would count as a valid sweep zone. Let me just draw on the liquidity there to show you how that was a sweep, okay? Cool, let's see if there's anything else. Gets a little bit messy and tight within here. So let's see. So yeah, so pivot in price to the upside, okay? So we obviously know some demand has broken some structure from within here. So let's just draw on that zone as a starting point. Okay, we can see that we have a zone that broke structure here. Now, if we want to know if it's a flip zone, what do? We look from the start of that pivot in price, right? The start of the reaction, look left. Do we have an unmitigated zone? So this one's a bit of an interesting one, right? Because you've basically got it like that, just clean it up a little bit there, take the whole level. And what you have in this instance is you have the initial reaction from that supply, right? It reacts, fails to put in a lower low, and then price moves up. Now, in this instance, remember, for me, I need to see a candle closure above where that reaction starts for there to be a confirmed failed reaction. Okay, so we react and we move up, but on this time frame, we never close above the reaction. So that's why for me, I prefer to wait for the candle closure, which we don't get to here. So once we get that, then yes, then we have the flip, okay? So when we're up here, and if you were interested in this flip, that's when I would be looking to get involved, okay? But if you're looking to see if it's swept liquidity, obviously this is a bit of a messy one in that whole reaction, but can you see that a low was formed that then got swept by the time then the flip was completed, right? You can see price came down, next candle fails to break the previous candle's low, right? So that means that price moved up. So now you have a low, price has come down and it's swept that low and then moved to the upside. And then you get the flip, right? So that is another flip. That's swept liquidity. What's also nice is it also mitigated the extreme. Okay, so then if you're looking at this as a trade idea, you've only got one zone you can trade from, right? You're following the mitigations, that's done. So now you've got a nice easy zone to pick from. Okay, so this type of, let me just draw on the thing, the sweep. This would be when like the initial reaction gets swept, okay? So if we look back at the examples here, it would be this one, okay? So price comes into supply, initial reaction, it moves up. We don't break structure or get the failed reaction just yet. We sweep it and then we go. That's what we're looking at here. All right, price comes in, whoops. Price comes in, it reacts, it pushes up, it forms a low. We don't get the failed reaction out of the breaker structure, so we're just chilling. Then we get the failed reaction, supply fails, structure shifts, and now you have your supply to demand flip. That's swept liquidity, right? And then again, got another one straight away, okay? So we obviously have another zone that broke structure here. Okay, so we know we have valid demand. Now where you would draw your demand zone is a little bit messy in this one, right? Price action is not always super clean because obviously if it's super messy like this, I'll just draw it on the big candle at the bottom, like getting that pivot price, because, and the reason why I say it's messy is you see how the next candle fails to close above it. So then you could refine it to here, but then like the next candle fails to close above it, then you can refine it to here, right? So maybe you want to take that sell to buy range. Or maybe if you want to keep moving it along and be super mechanical, then you can move it to the first candle where the next candle closes above it. But you can see price ends up breaking it. So when you kind of get messy price action like that, it's a little bit tricky to know exactly where you want to have your refined zone. And if in doubt, just take the low, because at least, that's the more structural point, right, that broke the high. But in terms of this level, right, what did it do? It broke structure. So what do we do if we want to know if it's a flip? Look where the pullback started. Look left. Did we react from any supply? Not the best, but we do have an unmitigated wick there, right? So we can say that we flipped the supply that was left within that wick. Did it sweep liquidity? Well, where do you look? You look within the reaction leg. What did we do? We came down, we came up, we formed a low, we swept that low, and then we got the break, okay? So we have another flip that swept liquidity there, right? So you see how they all come in different shapes and sizes, but it follows the same framework, the same, things that you identify with it, same criteria is the word I was looking for there, to say whether or not it's a flip. I'm just going to look at a few more examples before we move on. So again, another pivot point in price, right? You can see some demand must have come in somewhere in the market to break structure. Where was the structure break? It was up here. Just keep it nice and clean. And there's multiple levels, right? We've got kind of, is there demand here? Is there demand here? Is there demand here? Well, let's kind of paint the story a little bit. We've got the extreme, but we've already had a mitigation, okay? So I wouldn't really be that interested in that anymore. So, you can move it along. Right, you basically have this whole range and you've got another potential zone here that you could potentially look at as well. There's a little bit of a mitigation here, but I wouldn't be too concerned with that. But yeah, if you're being super strict, then obviously you can, follow it along and build a bit of a demand chain from within here. But it's this whole general area, right? Is that demand that led to the breaker structure, okay? So if we are looking at whether it's a demand zone, this whole area, yes, it broke structure. Okay, did it flip anything? Well, where did the pullback start from? It started up here. Do we look left? Are there any supply that makes sense? Yes, we have this supply zone up here that broke structure, okay? Kind of looks like it, yeah, it did mitigate it. So this one here is another nice one. It's very similar to one we just looked at before, where you have the initial reaction into supply, right? It pulls back, price moves up, it creates a low. We then sweep that low, we mitigate the extreme, and then we go, right? So that is another one where the initial reaction from supply gets swept. And that is your flip there. Now where you would refine, because basically the flip, right, is from the high of the reaction. to the top of the reaction, okay? So this is where you can be a little bit unrefined, or you can try and find the pivot within that. So it was a little bit tricky in this case, but that's why I was saying, if you're ever in doubt when you want to refine a larger supply and demand range to a pivot and you're not quite sure, just take the extreme of that, that pullback, the sell to buy, because that's essentially, right, your strong piece of structure. And typically that's what price will end up a lot of times rejecting, okay? But you can see what we're more focusing on is the idea that the reaction got swept and then we flipped the supply, okay? Have we got any more? Kind of another similar one up here, right? Another pivot point in price led to a break of structure. So let's say we broke this high all the way up here. So, you've got your nice extreme there. So what do we do? Again, broke structure, demand. Did this react for anything? Looked left. Yes, we got this level of supply here. Oops. God, my monitor's making creaks. Hopefully that's not been too annoying in the microphone. I only just noticed. But yeah, so we've come into supply here, right? We've reacted, clearly not broken any structure, clearly supply has not done its job. And then as soon as we close above the reaction point, at this point, you now have a confirmed supply to demand flip, right? The reaction has failed. Once price closes above the start of the reaction, that is your range. But obviously, in terms of trade ideas, you still kind of want to see the actual supply zone itself truly fail. The reaction fails, remember, at this point, but you don't just get in straight away. You want to see supply actually get cleared out, structure shift, and then that's typically when we're much more interested in the zone. So you've either got the whole range, or what we can do is refine it to the pivot within it, right? The extreme of the reaction leg, if you want to be a bit more refined. Okay, excuse me, and what do you want to know if it's swept liquidity? Anything in the reaction leg, was there any lows in there that got swept? Yes, we came down, we came up, we came down, right? So we swept the liquidity below that low there. Cool. I'll go through a few more examples, but I'll go through a bit more quickly because I think you guys kind of get the idea, but I just want to show you some slightly different variations. So this one's a little bit, I think this is valid. So another pivot point in price, right? So let me see. Yeah, so we have demand here, right? It's kind of a messy demand range, but you've generally got this whole range along here. Okay, we actually pushed through. So technically that's not valid. So I'll talk through it anyway. Imagine, just if you can for me, imagine that price came in and it never breached the zone so that this demand was respected. Just imagine that, right? Let's just pretend just so we can see this example. So if this demand is going to do its job, when price comes in, what should happen? It should go on to make a higher high. All right, price fails to do that, and then we break and close below the reaction, okay? So again, imagine that we did hold it, or we obviously didn't, but anywhere from the low of the reaction to the top of the reaction would be your demand to supply flip. That's obviously quite a big zone, so you can refine it to the extreme or maybe that inside bar. But the reason why I wanted to talk about this example is because in that reaction, what did it do? It swept the liquidity behind a structural high in the previous leg, okay? So this is an example to show you of this one here, where it sweeps, right? We react from demand, we come up and sweep a high in the previous leg, right? We never actually put in the true high, and then we come down, okay? So that would be that example where flip sweeps the prior leg, all right, here, and we come up and do that. So that was a nice example of that. All right, let's just look at one or two more examples, and then we'll start to wrap it up. Here looks kind of interesting. Okay, we'll look around here, and then we'll call it a day on this one. But yeah, so, right, pivot point in price, clearly break structure, where we take this low down here, okay? So we obviously have supply. Well, let's draw on the demand first, right? We've got demand here. That's a valid demand zone, right? It broke structure. So when price comes in, what should happen? It should make a higher high. Price reacts, fails to put in a higher high, and breaks and close. So once we get a closure below the start of the reaction, that is your demand to supply flip. But ideally, we want to wait for demand to actually get cleared out and structure shift, which is what we get down here. So if you're looking at supply, you can take from the low of the reaction to the top of the reaction, or obviously you can refine it to the unmitigated pivot within that, which would be here. You might want to keep that wick anyway, just in case. All right. Now that's a flip. Did it sweep liquidity? Nice clear one here, right? Got a high in here, swept liquidity there. So that's a nice flip that swept. And again, remember, not saying we want to trade all of these. Just because you see one doesn't mean you should be trading it. This is just purely identifying it. It's nice to add a previous mitigation there as well. But yeah, that then obviously gets flipped. So this is what I mean. This can happen a lot. You can see who is taking control and where, this interaction between supply and demand. That's what I think is so cool about supply and demand, right? You can see just how the money exchanges hands, right? Price comes into supply, reacts, fails to put in a lower low. That reaction also mitigates this extreme here, right? And then we push up, but that's a valid flip. Is there a sweep of liquidity from top of the reaction to the lower of the reaction? Obviously you can refine it to the inside bar. For me, no, there is no, this doesn't sweep because we just come up, we just come down, we come up, we come down, and we go up, okay? So there's no low taken, right? There's nothing, there's no structure swept there. Now, some people will say that that is a flip that swept because it swept that there, okay? For me, it's not valid. At least the time recording, I don't see that as a low on this time frame. That is a low on a lower time frame, right? If we were to go down to the, say the 5 minute, what would you see there? You'd see an up movement, a down movement, and an up movement. And then price would come down and sweep that and then go up. So yeah, on the 5 minute, that would be a flip that swept liquidity, but on this time frame, it isn't. Now, some people will use that in your trading. Maybe that's something you want to use in the future, but I would recommend when you're starting out to ignore those for now and just focus on structure in this time frame. Like here, what do we have? We have an up movement, a down movement, an up movement, then price comes down and it sweeps that low on this time frame. So for me, that is a sweep zone, okay? So I'll quickly just draw that on and then I think that will do. But yeah, that's a good example kind of what I classify as valid for a sweep zone, right? That then broke that high. So we have a valid demand sweep zone. Did it, is it a flip zone? Well, where did the reaction start? It started here, look left. Oh yeah, look, there's some valid unmitigated supply. So we actually swept, we flipped this level, I should say, this supply level here, right? We came into that supply, reacted, swept liquidity in the previous leg, and then moved to the upside. So now you have a flip that sweeps, right? So on and so forth. Another one here, sweeps the low, continues to the upside. Did it flip anything to the left? Nah, that one's a bit, this is where you can get a bit loose with flips, right? Because technically what this has reacted from, there is going to be supply there, right? But it's big, it's massive, it's more of like a big pivot and a range. And that's why I'd say for the most part, when you're looking at flips, just try and focus on the ones that kind of react to an actual pivot rather than a big level like that. Now, if you get like, a bit of a small range, like, like this one where it's quite tight, then yeah, it makes a bit more of it. So you can say that we're flipping this range, right? And it's nice. But when you get something big, you don't want to say like instantly just go, well, we've flipped this range, right? Because then you could get another flip that forms here. And like, that's the actual one you want to focus on because it's flipped on more refined level, okay? Otherwise you'll just start drawing massive flips everywhere. But hopefully that's a bit more, or helped you to kind of, make it clearer in your mind, what these flips looks like in reality, but they all follow that same process. And hopefully you can kind of see that systematic framework that you follow. Look for a pivot in price. Did it break structure? Yes. Is it a candle where the next candle then closes above its high or low, right? Yes, okay, it's valid, I can draw on. And if you want to know if it's a flip, let me just kind of go through that. If you want to know if it's a flip, this zone, right? Just look, where did the reaction start? Look left. Are we reacting off any valid demand? Yes. Okay, cool. So it's definitely a flip. Do I know if it's a flip that swept liquidity? Did it take any high? Yes, it did. Okay. And you just kind of go through that process bit by bit and you're just adding layer by layer. Okay, cool. And sorry, I just forgot to add, like, you can do this on any time frame just to quickly prove it, right? We're here, daily chart on euro dollar. Now this was when price was trending really hard, so we didn't get that deep for pullbacks, but generally whenever you look left, what do old demand zones become when price is bearish? They become reaction points for pullbacks, right? So what do we get? Reaction from demand over here, fails to put in a higher high, and then we get a break and closure below the low. So that hole from the low to the top is your demand to supply flip range. What did it do? Without even zooming in, you can see it swept liquidity, right? We had an up movement, swept liquidity, moved to the downside. Obviously, you don't have to take that whole daily range. You can refine it to the extreme of the reaction leg, and then we get a continuation. And again, what do we pull back from? That's a pivot in price that broke structure. We know there's supply here. What do? We look left, and you can see we've come off this demand level here. Swept liquidity within there, right? Without even zooming in, that would be your extreme of the reaction leg. So at the moment, currently looking to see if price is going to make its way up there to see if we can get another bit of a pullback, right? Of course, we're within the whole weekly range at the moment, this whole buy to sell range. But it's just the same thing again and again and again. Then actually when we broke these major lows, there's no recent demand to work within, but there are, flips within structure as well. So like, let's see down here, right? What do we have? We have a daily demand zone that at least broke some structure there. And what did that reaction do? That reaction failed to put in a higher high. And then we broke and closed below. But what did it also do? It swept liquidity, right? We swept that high, then we swept that high again. So you've got that sweep right at the end, and that is your flip zone. Obviously, by the time we didn't revisit it straight away, by the time we did, we had then switched bullish with structure. All right, we took the low, took the high. So now what do old supply zones to the left become? They just become reaction points for pullbacks. But how can they also be relevant even when price pushes through? Why would sometimes I leave an old zone that's now failed on my chart? Well, because it helps you paint the picture of that supply and demand interaction. What do we have? We had a reaction, failed to put a low, failed to put in break any structure. We broke and closed above it. So now you have a supply to demand flip. You can draw it from the top of the reaction to the bottom of the reaction, right? And there's your zone. Or of course you can refine it to, you know, the pivot candles within that, or down to the low. This one didn't actually sweep any liquidity. It's not a sweep flip because price just pushed back, right? And then came up, didn't do anything, okay? And again, any old supply zones you've got over here, what do they become? Reaction points for pullbacks, right? And you can paint the story again. What do? We react from supply, failed to put in a clear lower low, break and close above. So again, anywhere from the top of that reaction to the bottom of the reaction is your flip zone, but that's massive. That's just the whole daily demand range. So we can refine it to the single candle pivot within that. Did it sweep liquidity? Yes, right? We can see that it swept the low there and it even swept the low behind there. So now we have this larger flip that swept liquidity, and that can look for a pretty nice level to potentially try and catch a daily high low, potentially up into that big flip that we were talking about over there, right? Where supply originally took control from that level down here, right? That swept liquidity, but because we're bullish, the assumption would be when we get up here that it's just going to be a pullback before we go higher. Of course, that could change. We could absolutely melt, but that's the expectation until otherwise. And that's how we start to paint all of this together. But we'll get into that more with trade ideas and you know, introducing it with all the other concepts that we use very, very soon.